The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll take a quick look here. The first chart, of course, was the FTSE. They're on holiday today, so there's no trading. The second is the DAX. You can see it's had a pretty good rally. Nothing like what we had, but it had a pretty good rally. And, of course, we'll keep an eye on some of these other things. I would like to mention in the overnight markets last night, right after they opened, which was around 6 o'clock New York time, Shane Smolian had sent me a little reminder that the Fed was going to start doing their gamesmanship right after the opening. By golly, he was exactly right. So my hat's off to him. And he said this pretty much was going to happen, and it certainly did. One of the charts that someone's asked me to talk about that I have never seen before is the one from Argentina. Excuse me. Venezuela, I believe. Yeah, it's Argentina. Sorry, these are, you can see in Argentina bonds what's happened here. They've had a collapse there. I don't know if it's, I thought Venezuela was doing this. I didn't realize Argentina was doing this also, but I don't know. The peso has gotten whacked too, I guess, but that's a very interesting situation there. Don't know anything about it other than that chart. Just sharing it with you for what it's worth. Okay, folks, I'm going to give you my 2 cents worth, what I think is happening. And here's what I think is happening. I'm not saying, I'm just showing you the relationship here. I'm not saying the market is going to crash or anything like that. I'm not talking about that at all. I just want to show you the cycles that I'm looking at. Okay, this is from 1987. You'll notice that first left arrow there, that was harmonic convergence. That was October, let's try it again, Larry, August 25th of 1987. Today's the 26th, of course, and so we're day off. The market went down into September, which was a solar eclipse. It rallied up into the 2nd of October, and that was a 61% retracement, and there was a Venus square Uranus at that time. Today, we have Venus trine Uranus. So this is another similarity that we have here. You'll notice that October 16th, that was a Friday. That's when the Dow was down 4%, and the next day, led to the crash. So I'm not gonna dwell on that. I just want to show you the things. Now, the important thing to look at here is the high from August the 25th to October the 2nd in 1987 was 38 trading days. Well, by golly, guess what today is? We had 38 trading days from the high we made on July the 15th. So let's pay attention to that. Let's look at this astrologically. We're just going to bring this up here and just show you the transits. You do with it whatever you like, but we'll see what's going on here. The one on the left, 1987. If you'll notice on the right corner there where it says 1987, you see those little planets that are all lined up like that? You go to the right side over here, 2019, there they are again, within 1 degree. The odds of that happening are very, very extreme. It'd be like hitting the lottery twice in a row. So something big is going to happen here. Whether it's up or down, I don't know, but it's a huge thing, and it should be very, very important. But whether that happens or not, we don't know. Now, the market was down hard last night. It stopped exactly at the 78% level at that 28.14, 28.10 level. And I think 28.10 was the actual low. We rallied 90 handles, 80 some handles, right up to the exact 61% retracement. And it was, very, very, very strong rally. I think I can show you the Dow Jones because, here's the Dow Jones. You'll be able to see it did exactly the same thing. Can't make these numbers up anyway, but that's what we're watching. And that's basically based on what happened with the words from President Trump about there was going to be a Chinese deal, and they had called him, and all that stuff that happened. So whether that comes to fruition or not, certainly remains to be seen. But there's another market that has made what I think is a monumental top, boys and girls. And it was happening at the time that all this stuff was going on early in the morning last night around 6:30 to 8 o'clock. New York time. Let's take a look at the gold market here, folks. This is a 4-hour chart going back over the last 10 days. On that high we made at 1565, that was a 1.618 expansion from the 15th of August, and it was a 1.27 expansion from the 13th of August. It was also exactly $65 up from the bottom that we made back on the 22nd. How much is that? That's the harmonic number. The market came down last night, $34 right to the harmonic number, and I believe this market is getting ready to have a major top in place. That's what it looks like based on all these numbers and all these cycles coming together at this particular time. Whether that happens or not, I don't know, but that's really what we're trying to ascertain is what will be going on today. If we close above 2,900 today in the S&P, it would certainly look like all of these things would be wrong, but we'll have to wait and see. My whole premise on this, folks, is this: when you're looking at some of these chart patterns, I just want to bring up a couple for you because they can't all be wrong. Here's the one for the Russell 2000. You'll notice the 382 retracement. Again, that was 38 calendar days from the high on July the 15th to the high we made here just the other day. So all of those were doing exactly the same thing. I mean, these charts are so very bearish that maybe it turns and maybe we're going to do something good with China, and I hope that's right because there'll be great volatility no matter what. But look how they've reacted. I mean, it's going to have to take and it could certainly happen. We could have a big move up here, and above 2,900. This would certainly say, yep, that was probably a major bottom and not going to be a top. But I don't know yet. It's still, the jury's still out. So anyway, if you'll take some time going through the charts in the newsletter, you'll see that all of them have the same theme, the bearishness that's there with the divergence, and all of it is really something. And when we look at the the Bradley model, I know the Bradley model's been holding up relatively well. I'll bring it up here. You're right, that David, 12 angry men in the jersey. You can see here there was 38 days from the high, and last night we got down to that. We touched that same level again. That's basically like a head and shoulders bottom. That's why we had the rally up to the 61% retracement, along with Mr. El Presidente's comments. But it still looks like the Bradley model is heading down into September 23rd. Now, there's one interesting thing about this, folks. We're going to have a break here, and then I'll tell you more about it because I was doing work with John Jameson over the weekend, all day Saturday evening, Sunday, and it's about this model that we're looking at because if we're correct, we're going to have a roadmap of what's going to happen to the stock market for the next 3 or 4 months, and it's going to be exciting. So we'll be right back. 877-927-6648.
If you're not currently using the TAZ Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAZ Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAZ understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAZ Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAZ Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this chart that you're looking at right now is a chart of the Dow Jones Industrial Average. Those little red dots, the first red dot, of course, was the eclipse back in July. The other two are related to that aspect chart that we just looked at a little while ago with the Venus-Uranus aspect occurring, and this is the low on the 15th, and the next major low, if this is correct, and we're, is going to be on the 2nd of September. That's a holiday. That's next Monday. So it's Memorial Day. So it'll either be it'll most probably be on the next day. Of course, it'll be open on Monday night because of Goldbeck's trading. But that should be a very, very important key trending day. Now, if this is correct, and we are looking at what we were watching in 1987 revisited based on those aspect charts that we've seen that look very interesting, and the fact that they were both at 61% retracements 38 days into the future. That tells us that the big day will be October the 8th. That's one day off of the high that we made back in it was in 2007, I believe. The market topped on the October the 7th. Now, October the 3rd, let's try it again, Larry. September the 3rd is the anniversary date of the high of the stock market in 1929. So we are in some really interesting timing things here, folks. It's going to be really exciting to watch it all unfold. So let's keep our powder dry and see what's going to happen. We had a big move in bonds last night. They were up 2 points at one time, and a point and a half, and then they reversed, dropped another. So we had over a $3,000 move in bonds last night. We had a $60 move in gold. We had a $600 move, 600 point so far in the Dow Jones Industrial Average. So we're having some great volatility. Last night, when the markets first opened, something happened that I thought was relatively important. So I sent out a little video on it, and I want to show you now that I didn't think there was going to be a crash coming. And the reason for that was what was looking at in the euro, and this is a 15-minute chart, so you get to see it over several hours. You can see what it did is it opened a little bit higher. It completed a perfect 3 drive to a top pattern. You can see it very, very clearly. But if you would add some more time to it, and that's what we did, we'll get this up here so you can take a look at it. I have to do 2 of them here to show you what happened and what did happen. Let's get it up here first. We'll get it right here. Yes, this will do it right here. Hold on here. Oh, just 1 second. I got to get the right chart. Shut the front door and raise the right. Here it is. Okay, hold on. Here's the euro over the last 5 or 6 trading days. The high that we made was you can notice there, it was a 3/8 true retracement off of a previous high. There's the 3 drive to a top pattern. As you can see, it was just absolutely perfect there at 111.64. The high was 111.65, and we dropped to well over $500 last night. And that was basically part of the reason, long before President Trump started to say anything about China, the market had already rallied. The real key rally was when the market got to close to unchanged, which was at 28.55. That's when it really started to rally. I mean, it exploded out of there, went right up to the 61% retracement so far. Maybe it's going to go higher. We'll have to wait and see. But that was the sequence of what was going on. I mean, there was just a lot of things occurring that, but this was telling you that the market was not going, to collapse. If it was going to collapse, you were going to see a really big move. That's where they usually start, is in those foreign exchange markets. Look at the Chinese renminbi, folks. It got up to 717. We were at 690 just a few days ago. That's a very large move. That puts more pressure on China also, but puts pressure on everybody, I guess. So those are just a few of the things that we're watching here this morning. The thing about the Argentinian bond thing, I'm not sure what that means. It just shows that they dropped 50%. That might be a very thin market, but that's a pretty large country, Argentina. So fact is, if you ever get down there, go to Buenos Aires. Boy, that's really beautiful. It's like being in Italy. It's just, it's really, really spectacular. So those are the ones that I think the most important last night from the perspective is the fact that we hit the 78% level in the S&P down there at 1810. We get below that, we're gonna go a whole lot lower. And if the other one is, of course, the gold. The gold made that big 1.618 expansion in 1.27 and immediately broke. I mean, it just literally came unglued and continued to move lower. So we believe that you probably have made some type of a major top here in gold. As long as we don't get above 1549 in the next day or so, I believe that we're heading lower in that. Now, there was another market that was making a really beautiful pattern right at the open last night, which was exciting to watch because it was doing everything, doing what the exact opposite of what the market was doing. But you see the big gap down that we had in crude oil. That was a beautiful 3 drive to a bottom pattern. You'll notice that the price of 53.20, that was the 61% retracement on the daily chart, folks. That's why it rallied so much. And of course, it's got all the way up to 15 this morning, which is a 50% retracement over that whole move. So it moved more than $2 a barrel when the stock market was, falling out of bed and then started to rally. So it was running on its own thing. But that 3 drive pattern in the euro is exactly like the 3 drive pattern that we saw here in the crude oil. There's no difference. It's A, B, C, D. The time difference between A, B, and C, D are equal. It just sets up perfectly. There's no gaps. There's no wide bars. You know exactly what your risk is at that point. And those are, you're looking at smaller time frames, but that's how you quantify your risk. And you don't have to risk too much when you're looking at some of these things. So those are just a few of the things that we're looking at today. And believe me, there's a lot of things to pay attention to with all the markets that are running around looking at these today. I don't someone's asked me a question about what do I think will happen over there. I want to wish you a whole lot of luck on the G7 stuff, whatever you think is going on over there, because what's probably going on is not what they're telling us. That would be my 10 cents worth if I had to put this. Okay, David. All right, let's move on here. I wanted to bring this to your attention because I think it was important enough to pay attention to here. Let's just look at the Commodity Research Bureau index chart, because they've been hammering these commodities for quite a while here. I think we're very close to a bottom in many of these things. This is the CRB index coming out of Bloomberg, and you notice on the way down we've had this parallel channel showing the 3 drive to a bottom that's forming right now. And if you look on the left side of it, you'll see the 3 drive to a top pattern. It's just doing the exact opposite. You know, those are just channels up and down, up and down. So we got multiple ABCDs coming in here. So we want to be keeping a close eye on things that we're looking to buy, one of which happens to be natural gas. And it was another one that was started higher last night with everything going on. It still started to go higher and has continued to go higher. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by ThinkorSwim. For more information, just click the ThinkorSwim banner on the front page of TFNN.com.
Okay, one second, folks. We're going to take a look here at the natural gas because we've been following it this year all along here. If you'll notice, on Friday, we came down to the we hit that 61% retracement. There was an ABCD pattern right in there. It's had a nice move of well over $1,100. It's cleared the 78% level of the 21st. That tells us that most Sorry, folks. Bear with me one second. Most probably what's going to happen here is if you look at the low on August the 5th at 203, the high up there on the 15th at 27, that's 24 handles. You add 24 handles to the D point, which is down there at 12, 24 added onto that takes you to 36. That's going to probably where we're headed in this natural gas contract is around 236. That's up another 1,600 points. So that's a very nice pattern, and whether it's going to turn or not, we'll have to wait and see. Yes, Ruby, I'm noticing that the hogs are up. Fact is, some of the wheat has held up relatively well, as has corn. So none of those things were involved too much with the tariff stuff. But who knows what's going on with that? You don't really know what's happening, and that's why you try to follow the charts the best the way you can. Folks, I've been doing this stuff for a very long time, and I mentioned in the newsletter that I did on a video this time because I couldn't trust my dragon speech recognition, and that is those aspects that we're looking at that are comparable to 1987 is really worthy of your attention. And the reason for that is the fact that that's how I got interested in the astrology part of this. Unfortunately, it doesn't work all the time, but when you have something that sets up like this, both mathematically with the chart using Fibonacci numbers at 618, and then the aspects doing the same thing, and they're a heck of a lot more accurate than these things are. They're it's a giant clock. So it's worthy of your attention. So whether it happens or not, I don't know. I do know with a high degree of probability, if this is going to be the case, and we're going to have a monster September 2nd and an even bigger monster October 8th, where the markets will be during that time is still up in the air, but that's just that's what we're watching here. Let's take a look at a couple of quick commodities here that we've been asked to take a look at. One was the hogs that Ruby just talked about. We came down and we held that support again one more time at that 61.50 level. So they must be up pretty close to the limit this morning, which they were in a buy zone, but whether they were going to be up the limit, we don't really know those things, but we'll take a look. The other one that we're waiting to look at to be a buy, of course, is the Christmas corn, December corn. This one has been all over the map. If you ever wondered why I'm a technician, this is the reason, because of the fact that the news was so bullish between May and June that they thought there would be no more corn in the world. And what did it do? It dropped $1.25, $1 a bushel. On its way. I think we might make new lows here down at 350, and so we'll see whether it does it. That would be completed at that pattern right now. So it's still down a little bit. So I would think we're still going to go a tad lower here as we look at some of these others here today. Now we have I believe we have Norm Winsky is going to be our guest here on the 29th. That's the day before we have the new moon that comes in here on the 30th. Don't forget we have a holiday on September the 2nd. The anniversary date of the stock market in 1929 was September the 3rd. The market was trading at 383. It bottomed in 1932 on July the 5th. Oh dear, I hope I'm right, Basil. At around $41 or $42 in the Dow Jones, and 15 of the 30 stocks went bankrupt during those 3 years. And that's during the time we had the greatest inventions of our civilization. We had electricity, indoor toilets, air conditioning, radio, television was just getting started, the telephone. I mean, all of that stuff was just going, but the automobile, there were 2,200 automobile companies at that time, and yet we went into a 3-year depression. Regarding Hong Kong, yes, we're watching it very closely over there. We've seen some really bad things happen on Saturday and Sunday. I think that's what led to part of the reason the market was down sharply. Now, the Hang Seng was down last night about 900 points at one time, but it came back and was able to, show the fact that it had some relatively good support at that level. But if we take a look at the Hang Seng, you'll notice here this is the weekly chart here in the Hang Seng, and we've held that low down there at 25,400. 200. That was actually 24,999 was the low. The low last night, when it was down about 900 points, was 25,400, and then it rallied about 300 points. Still closed down on the day. There was a lot of problems. Of course, they had a gunfire. One of the policemen fired a shot in the air, a warning shot, and that certainly scared somebody. You don't hear gunfire over in Hong Kong, folks. That just doesn't happen very often. When my daughter was going to medical school at Johns Hopkins in Baltimore, I talked to her after she moved in, and I asked her, how's it going? She said, I'm having a hard time sleeping at night. And I said, why? She says, well, it's a war zone out there. She said, there's nothing but gunfire all night long. It's like if you were at a target range or something, and a little different in this environment over there. So those are just a few things on the ad item. Let's take a couple looks of one of the other things I wanted to show you, just to give you. I wanted to bring this. This is really important to me, folks. This transportation index has a lot of bearish bias here. You'll notice that the high we made last Thursday was a 382 retracement of the high back on July 15th. Again, 38 trading days over, so that seems to be the theme of going on with some of these things. So we'll keep a close eye on those. By the way, if you have any questions, it's 877-927-6648. It would be helpful if you have anything that you'd like to have me take a look at. Someone's asking about Dr. Copper. Let's just get that up here, and we'll take a quick look at it. Give me 1 second, and we'll be all right here. Get Dr. Copper up here. Hold on. Still looks a bit lower, but let's get it up here so we can pull it up here. Been a long night, boys and girls. Hold on here just a second here. HG. There we go. 60-minute. Yeah. Well, we actually bounced pretty good. By golly, we did. We had a nice bounce here. Let's put the weekly up so we can take a quick look at it to see where we are. We've gone down here, but you really can't see it here. But let's look at the little rally we had so far last night. It's been a substantial rally. We went from 49 up to 54. So that's a 5-cent rally in the copper, but let's just get it up here. There's nothing really to write home about it yet, but it was able to rally. That fact that it didn't fall out of bed was good also. So there's possibility. We've looked at. Let's do the weekly too, because that's the one that looks the cleanest as far as a potential bottom coming in. Let's get this up because we took out those lows of 2018 in November, and here is the chart for copper.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, we have a caller from Kansas. Robert, are you on the line?
Yes, I am. Thank you for taking my call.
What can I do for you, my friend?
I was calling in. I've never really followed or traded the Treasury before, but I've taken a interest in that, and I was looking at it and thinking that it's getting some topping signals that I'm kind of just waiting patiently. But my question is when you're going to short the Treasury, I know you seem to buy futures, but I don't do that. I buy typically the ETFs.
Sure.
Now, I'd heard you talk about the TBT to short the Treasury. Is there, I looked at the TBT, is there a reason that you use the TBT rather than the TMV? The TBT looks like the volume's like 2 to 3 million shares a day, and it's a double leverage. And the TMV is a triple leverage, but it has about 900,000. Would you be reluctant to trade something with like 900,000 shares versus the 2 to 3 million of the TBT?
Well, when you have 2 million versus 900,000, you want to go with the 2 million, but there's something more important here, Robert, and that is you're new to this, and I certainly wouldn't have you doing triple leverage in that market. I mean, that's like, sending a guy with a gasoline can in to put out a fire. So you don't want to get involved with that. Stick with the TLT, which is the 10-year. On the long side, and TBT is you're looking for the market to bounce. In other words, the TBT is going down while the TLT is going up. So if you want to go long, you go long the TBT, and if you want to go short, just the opposite. You go long the TBT if you want to go short. That's the ultra short. So that's what you'd be looking at.
Do you agree that do you see topping signals in that market as well?
Well, yeah. I saw a beautiful topping pattern last week that had $3,000 in it. And then on Friday, and I'll just post a chart here and show you, this will be the notes and the bonds together with the news that came out on Friday with the Dow, down, a lot of points. I was 700 points or whatever it was. We had gone up to the 66 level, and then last night when the market first opened, we rallied all the way up to 67.16, and then quickly sold off $4,000. So there's signs of it, but you have to you have to realize how much you're going to risk if you're going to try it, and if you lose that, go on and lose something, do something else. So try never to risk more than 3% of what you're trading. So if you got a $100,000 account, you risk $3,000. If you got a $50,000 account, you risk $1,500. Don't risk any more than that, because it'll give you lots of chances to be right, and you're going to be wrong a few times. But that's the risk control is the real key here, is to watch that very, very closely.
Right. Well, I'm not new to trading. I just never have traded the Treasury before. I trade other instruments. So
Okay. Well, the Treasury futures, Robert, are the largest of all the contracts. I mean, they're much bigger than the S&P. You know, the notes trade, they have an open interest of 4 million, the 2-year, the 10-year, and the 5-year. The Treasury bonds have a open interest of about 900,000. So it's a lot of volatility in the bonds, but they don't have the same open interest that the notes have. So if you want to go slow, go with the notes. That would be the easiest one. You can't hurt yourself. Well, you never know. But usually the notes move a lot slower.
It was interesting. I ran a chart and I compared them. Usually I don't compare, but just out of curiosity, I was comparing them to the S&P, and I didn't really see any correlation. But I did find kind of a loose correlation with the TLT and the GDX. Does that surprise you, kind of like a flight to quality or safety?
The TLT I can understand. The GDX maybe so, because gold is that's real money to some people, and so that's why it's so important. So I would have to go along with that, yes. But I don't look at correlations that way. I trade each instrument separately, because that allows me to give me my total risk control that I want. But even more important, that it doesn't allow me to think past what I really want to know. And that's one of the problems that you have in trading, is you start to see something and then you start adding this and adding that and adding that. By the time you've added 4 or 5 things, you forget where in the heck you are, and you lost sight of where the trade is. And you want to focus on how much you're going to risk and keep it as simple as possible. That's what seems to work the best for me, because when I start adding a whole bunch of stuff to it, like a little astrology and little cycles and stuff, it gets a little bit confusing sometimes, and it's easier to just do the charts themselves, because that's the sum total of all the buying and selling. That's what you really need to look at.
Well, that's helpful. That's helpful. Thank you so much.
But yeah, start with the notes. The notes, if you want to even do note futures, they have a mini contract for the notes and bonds, and those are easy to trade too. They're 1/2 size, and they're pretty active traded too. So you can do that. If you're experienced with trading, you understand risk control, you're going to be just fine.
All right. Well, thank you.
Okay. Thanks for calling in. You betcha. All righty, let's move on to one other one that we wanted to talk about, and that is this dollar yen, because here's another reason why the market snapped back. We opened down below the 105 level. We got down to that 104.80 level, and that's pretty much stopped it. That was a low that we made back in December. We took it out by just a little bit, and then the market reversed. That was another reason why the market started to rally. You can't blame everything on the El Presidente, because all this stuff had already been happening when he came out with his tweets and ideas, or whatever he's looking at. So those are just a few of the things that were making these things jump around last night. And of course, that US dollar, we talked about that with the euro, very, very important, because of the fact that it was at such a really key level. And we'll bring this up here, because it's just actually held relatively well last night, folks. We got down a little bit, and it snapped back pretty good. We took that trend line out by a little bit, but it didn't collapse below 97. It's held up relatively well. So that's telling us that the euro really needs to get above the 112.30 level, and then you'll have a pretty good chance of a pretty good move in the euro for a longer period of time. But until that happens, I don't believe that we're going to see much going on here. You can see here, when we look at this chart here on the euro, the importance of that number. The 78% level came in, at 110.70. The low was at 110.60, and then we rallied all the way up to 111.63 last night, which was the 61% retracement of the high from 112.50. So that's why I said once we get above that 112.30, that means we've cleared the 78% level, and we're probably be on our way for an ABCD structure here that would take it all the way up to 1310. That would equal the last rally we had between May and June. So there's see what's going on. We got another question coming in here. See what we got going on. Okay, we got Mr. Z on the line. What's up, buddy? Hey, we got a break here soon, but stay with us. What's your question? And I'll get it ready for you if I can.
Would like to ask Larry if I can have you review the Dow Jones and some of the timing issues you laid out right at the start of the show, please?
Oh, sure, I can do that. I'll be happy to do that. Yep. I'll repeat that. I think it's worth repeating anyway, so we'll take a look at it. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by ThinkorSwim. For more information, just click the ThinkorSwim banner on the front page of TFNN.com.
Okay, we're back, folks, and Mr. Z asked me to go over what I started the show with, which was the situation in the Dow Jones Industrial Average and how it relates to... Yeah, you're here. I'm here, buddy. What's up?
Can I interrupt and ask you very specifically something here?
Yeah, you got it. Fire away.
At the top of the show, you started talking about the Dow here this year, the Dow 1987.
Yes.
You had mentioned 36 or 38 trading days. First, I just want to think...
calendar days, John. Calendar days.
Then I was incorrectly hearing. That's the first question that you resolved. Yeah. Thank you.
Okay.
Secondly, if in fact there is a analog repeating here, a high occurred, last Thursday or something.
Friday.
The 25th.
Yeah.
If the analog continues to track, we're hard down right into, September 8th.
September 3rd and then October 8th. Those are the two dates that would line up equally to what happened during that time frame in 1987 and how it lays out right now. That would come in on September the 3rd. 2nd is the actual date, but we're closed that day. Globex will be open. Then the other one was October the 8th. That's one day off of the high from in 2007. So those are going to be really interesting ones, and they're all related to 1987.
Thank you on that. One last follow-up question, please. I was looking in on Tiger TV to the transit charts that you posted, which you remarked upon. And my question specifically is the transit chart from this year. What is the specific date that transit chart is of, please?
Today.
Today.
It could have been Friday, but I thought it was Friday given the action down, but the rally back today at 618. I don't know, but it's there now. It's August. Today's we have Venus Venus trine, which is 120 degrees Uranus, and that's exactly 618 of a year, John. 0.618 of a year. Hey, thanks for calling in, buddy. We'll talk to you tomorrow. 877-927-6648.